Hello friends, how are you? Welcome back to the EFF Excellency Batch for all of you. Okay, so what we have been doing is about the national income. We have been discussing about the national income, so that's what we are going to continue with. So in the last lecture, what we discussed was, we discussed about personal income. That personal income is a measure of actual income receipts of the household sector, that whatever the household sector is receiving in actual, right? In actual means whatever they are receiving in the form which they can spend on the consumption, that is my personal income, that form the part of my personal income. But if anything they are earning but they are not receiving, right, that means they cannot spend that money earning, right? So that will not form the part of personal income. That is what we have discussed in the last lecture. Whether they are receiving it in the form of factors of production. If they are receiving it in the form of factors of production, then well and good, sir. That is a part of national income. And if they are receiving something beyond that, right? If they are receiving something beyond that, even that is to be included in the personal income. So any transfer payments, because that is a income for a person, okay, that they can spend that consumption expenditure. So we discussed about, like, the Ram lost his job during COVID-19. He received 4,000 as compensation. He received this particular amount as unemployment compensation, right? So because he has received that amount, he can spend this 4,000 rupees on anything, right? So that forms the part of your personal income. So personal income form the basis of consumption expenditure, because personal income tells us that how much expenditure you people can do. Okay. After that, so personal income is national income. Why national income, sir? Anything that is earned in the form of factors of production, that forms the part of my national income. If you are a factor of production contributing and you are earning out of that, that is the earning that you are getting from national income, plus the income received not earned, like the compensation. You are receiving something which you have not earned for, which you have not worked for, right? Minus the income earned but not received, income that is earned but not received. Clear? So now the next concept here is that we are going to discuss is disposable personal income. Now what is disposable personal income? We have discussed about the personal income, that personal income is anything that you are receiving that you can spend. Now what is disposable personal income? Disposable personal income is that out of the total personal income that we have discussed, how much is available to you for spending. Clear? How much is available to you for spending, that becomes my disposable personal income. Let's read. So disposable personal income is a measure of amount of money in the hands of the individuals that they can either spend on consumption or save as per their wish. So what is the actual amount? What is the actual amount in the pocket of an individual that he or she can either spend on consumption, right? They can either buy some goods or they can take some services from that money, or if they wish to, they can save. They can save, they can do the investment of that money, they can save it in the bank, they can do investment, they can do PPF, they can do FD, anything they wish to do, right? But what is the actual money that they are taking in hand? That is that is known as disposable personal income. It is derived from personal income by subtracting the direct taxes paid by individual and other compulsory payments made to government. So direct tax is what? It is a tax on your tax on income. So he says, what is the net amount that the income individual has in the hand? That is known as disposable. What is at his disposal which he can either spend on consumption or he can save that money. For example, we have taken a very simple example with which you will be able to understand in just one go. Very simple example. We say that Ram received a salary of 10,000 rupees. Very good, sir. He put this 10,000 rupees in his pocket and started his journey towards his home. So he has got a salary of 10,000. He put it in his pocket and started his journey towards his home. On the way, an income tax official stopped him and charged his 1,000 rupees as income tax. Which income tax official? This is a direct tax. So this official says, okay, Ram, you have a earning of 10,000 rupees. Please pay income tax on that 1,000 rupees. right? The income tax official can ask for it. Yes, definitely the income tax official can ask for that, right? So he says, please pay this 1000 rupees. Now, is there any option with the Ram? No, sir. He has to pay that. Now, the Ram paid the tax and resumed his journey. After a few miles, he was stopped by a police officer and was fined rupees 500 for not wearing a helmet. Now, he was going on his bike. He was going on his motorbike. So, after paying to the income tax official, what is the amount that is left? That is 9,000. Now, as he was approaching his home, there was a police officer who stopped him, and the police officer said, oh, 500 rupees, give me. Why? You're not wearing a helmet. You are violating the safety rules, isn't it? So again, the Ram has no option, sir. Ram has to pay that because Ram has committed a mistake here, right? So Ram has to pay for that. Now the Ram has paid 500 rupees also. Now what is left? What is the amount left with the Ram is 10,000 minus 1,000. That is the direct tax, income tax that he has paid, minus 500 rupees. So net 8,500 rupees is left with the Ram. This is the disposable income of Ram, which he can either save or spend. So DI is equal to personal income. What is his personal income? His personal income is 10,000 rupees. This is your personal income because he has received 10,000 rupees. So any income which you are receiving, that is a personal income. But out of that personal income, what is left with you for the consumption or for savings, that is known as disposable personal income, right? So you'll be paying the taxes, you will be paying the other things, like he paid the fine of 500 rupees. So all those things are there. Clear? So this is disposable personal income minus the personal income tax and the other compulsory payments. Here it was 1000 rupees as income tax, 500 rupees as fine, which is a compulsory fine. You have to pay it. What is personal income? The amount that he has received, that is 10,000. So what is left here? The disposable income is 8,500. Clear? So this is about the disposable personal income. Now next is national disposable income. National disposable income. Now what is this concept? Again, a very good concept, sir. A very good concept. What does this concept say? National disposable income. Now, in the last topic, what we were talking about an individual, right? Now he says, I want to calculate as a nation, what is the income at my disposal? So how will you calculate as a nation, what is the income? As a nation, how can you identify the income? We say in the nation, what is the total goods and services being sold? What is the total goods and services manufactured and sold? Isn't it? Manufactured and sold. Clear? Isn't it? That's what we say. So this is how the nation is generating the income. How? So the goods and services are being manufactured and then being sold, right? Now, if you are selling this, at what price you will sell? At market price or at factor cost? Yes, sir, you will sell it at market price, right? So that is what he is saying. He says the national disposable income, NDI, is defined as the net national product at market prices, that whatever you are manufacturing, net of depreciation, whatever you are manufacturing or whatever you are getting from outside, it is a net national product at market price. At market prices, when you are selling the goods and services, you are generating an income. That income becomes the national income, right? Net of depreciation, because in case of depreciation, there is no actual cash outflows or inflows. So net national product at market price, NNP at MP, plus the current transfers from the rest of the world. Now, what is this current transfer, sir? Current transfer, is it NFIA? Is it net factor income from abroad? Is it that the current transfers from rest of the world? What do you mean by this now? The current transfers from the rest of the world? Current transfers from the rest of the world means the income other than the primary income. When we are talking about NFIA, NFIA is the primary income. Primary income means the income generated by either manufacturing the goods and selling them, or the income generated by selling the services. From there, the primary income that you are earning. But when you are talking about the current transfers from the rest of the world, that is the income other than the primary income, right? Here I have given that the other current transfer refers to the current transfers from abroad other than primary income, right? Net other current transfer means the payments minus the receipts. Clear? So if there are other current transfers from the rest of the world, that will also be an income that is available in the hand of the nation for spending, right? The main idea behind NDI is to know what is the amount of goods and services the domestic economy has at its disposal. That is what I told you. The main purpose of NDI is to know what is the amount of goods and services that the domestic economy has at its disposal. What is the money that the domestic economy has at its disposal, which the nation can use for various purposes, right? Again, in that there are two concepts. In the national disposable income, there are two concepts. One is NNDI, that is the net national disposable income, and another one is the gross national disposable income, that is GNDI. NNDI is net national income, right? Net national income is net of depreciation and anything which is produced domestically plus the NFIA plus other net current transfers from the rest of the world. If there are any other transfers from the rest of the world beyond the primary income, right, that is also to be included. So NNI plus net taxes on income and wealth receivable from abroad, anything that is receivable from outside, right? Net social contributions, you can be getting those social contributions, right? Donations you might be getting from abroad, that is a part of other current transfers. If you are getting a donation for a purpose from abroad, right, that is a part of other current transfers. So that is what is there. If any taxes you will be getting on the income which is generated abroad, any taxes that if you are getting here, that will form the part of other current transfers. Clear? So in the case of this GNDI, gross national disposable income, he says here we are going to take the gross national income, that is inclusive of depreciation and other current net transfers from the rest of the world, right? So only difference between NNDI and the GNDI is the depreciation part, right? That we have already understood, that what is the difference between the net and the gross concept. We have already understood that, right? So this is the national disposable income. Now, the next part is the private income. What is the private income? He says any kind of an income which accrues to the private sector, So private income is a measure of income which accrues to private sector from all sources within and outside the country. See, when we are talking about our economy, if you talk about the domestic part, if you talk about our domestic economy, right, it can be divided into two parts. One is the public sector. Broadly, we can divide it into two parts. One is the public sector and another one is the private sector. So what is a private income? Public sector is in which the government has a sharing, right? The public sector is in which the government has a sharing. And what is a private sector? The private sector is which is not governed by the government, right? The government has no say, no sharing in that. So this private income is any income which is being received by this private sector. Any income which is being received by this private sector. It includes factor income as well as transfer income. So that is what I told you at the very beginning. Private income is any kind of an income which is being receivable, right, which is being received by the private sector, right? That is why I specifically mentioned accrues to private sector from all sources within and outside the country. That from wherever you are getting the income, which is accrued to the private sector, not the public sector. Sir, what about the public sector? What about the public sector? That we will discuss right now. Okay. So what I'm saying is, what is private income? Private income is factor income from net domestic product accruing to private sector, right, in the form of factors of production, right? If this private sector is my factors of production. For example, sir, I have taken a loan from a private company, right? From a private sector company, I have taken a loan. I will be paying interest on that. What is that? The factors of production. Clear? Plus net factor income from abroad, that is NFIA, the primary income, plus the national debt interest. What is national debt interest? You have given some loan and on that the government is paying you interest, right? You have paid some, you have given some money on the loan and you are getting interest on that. The current transfers from the government and other net transfers from the rest of the world, right? So anything which is accrued to the private sector, that will be included in the private income, right? Oh, right. After that, this is the point that I was talking about. This is from your ICAI module only, guys. This is the point that I was talking about. What? Domestic income. What is domestic income, sir? May be categorized. He is talking about NDP at FC, basically. The domestic income at factor cost. What is national income? National income is NNP at FC. So whenever we are talking about domestic or national income, we have to consider it as a factor cost. So domestic income may be categorized into the income from the domestic product, right, accruing to public sector. That is what I told you, that this economy we can divide it into two parts. One is the public sector and another one is the private sector. So accruing to the public sector, which includes income from property and entrepreneurship accruing to the government administrative departments and the savings of the non-departmental enterprises, right? So any kind of an income, if there is a property or if there is any income from the entrepreneurship accruing to the government administrative departments, that means all those departments, all those companies which are under the government influence, which are under the government control. And what is the savings of the non-departmental enterprises? For example, there is a company, Indian Oil, right? I'm taking an example. Let's say an example, Indian Oil. This is a government owned company, right? This is a government owned company. This is a public sector enterprise. This is a public sector enterprise, but this enterprise doesn't fall under any of the departments of the government. Doesn't fall under any of the departments of the government. That is what is known as non-departmental enterprises, which are governed, which are owned by the government, where the government has a share, right? But these are not under the direct influence of any department of the government, right? They enjoy their individuality also. So this is what is the income accruing to the public sector. Basically has two components: income from property and entrepreneurship accruing to the government administrative departments, right? And the savings of the non-departmental enterprises. So what is the income from domestic product accruing to this private sector? Total domestic income, that is NDP at FC, minus what is being done to the public sector, what is accruing to the public sector, minus the income from property and entrepreneurship accruing to the government administrative, minus the savings of non-departmental enterprises. Clear? So basically what he's saying is, for the private sector it is simple. NDP at FC, that is the total domestic income minus the income accruing to the public sector. Clear? That will be your private sector income. That is why after that he has given the private income, which we have already discussed, that what is your private income, right? I hope this much is absolutely clear, because after that we will be moving on to the illustrations part from your ICAI module only, right? So if this much is clear, very good, we will be moving on to the illustrations part. So let's start with our first illustration, that is illustration number 5. From the following data, calculate NNP at FC, NNP at MP, and GNP at MP and GDP at MP. So this NNP at FC is what? This is nothing but your national income, right? Okay, so first you have to start with the smallest one, right? What is the smallest one? That is GDP at MP. Then we can shift here from GNP to MP, where NNP to MP, and then NNP to FC, right? So what is GDP at MP? GDP at MP is the value addition. That is the value of output manufactured within the domestic territory in a given period. And what is that value of output? I told you that is market value of all goods and services. That is the rent, labor, interest, factors of production plus the net indirect taxes, right? So what is factors of production here? What is factors of production here, sir? Operating surplus. Is it a factor of production? Yes, sir. So it will be included in the GDP, right? So if you talk about GDP, it will be 2000 plus mixed income of self-employed. Yes, sir. Rent and profit. Rent and profit, we have already discussed about it. That's rent and profit and interest. They are a part of operating surplus only. So if operating surplus is given to you, the rent and profit separately is not required to be taken. Net indirect taxes, yes sir. Consumption of fixed capital. What is consumption of fixed capital? It is nothing but your depreciation. Yes sir, for the gross concept, you have to take the depreciation part, right? Net factor income from abroad? No sir. Compensation of employees? Yes sir. Okay. So GDP at MP is compensation of employees plus the mixed income of self-employed plus operating surplus plus depreciation. What is depreciation is what? Consumption of fixed capital plus the net indirect taxes. This is what we have studied. So he has given a note here that operating surplus is equal to rent plus profit plus interest, right? So rent, if operating surplus is given, then rent and profit separately is not required to be added. So you can easily calculate GDP at MP, right? That comes to 4950. Now the next thing that you want to calculate is GNP at MP. That means you want to go from domestic to national. And if you want to go from domestic to national, what will you do? You will add net factor income from abroad. So whatever you have calculated, you will add this minus 50 to it, right? So GNP at MP is equal to GDP at MP plus net factor income from abroad. Clear? Any doubts? So next is now NNP at MP. You have GNP at MP. Now from the gross concept, you want to go to the net concept. That means from GNP at MP, you will do what? You will subtract depreciation to reach from gross to national, right? See, for these things, that is why I have taken these small parts here. These small things are important, the things to remember. Where it is, right? These ones, the point to remember, right? These are very, very important, guys. Clear? So from here, in this case, now NNP at MP is equal to GNP at MP, right? Minus the consumption of fixed capital. Consumption of fixed capital is nothing but your depreciation, right? So 4500. Now from NNP at MP, you want to calculate NNP at FC. That is, you want to go from market price to factor cost. What will you do? You will subtract the net indirect taxes. So NNP at MP minus the net indirect taxes. You will get NNP at FC, which was the requirement of the question. Clear? So these kind of questions, this can be asked for 5 marks in the examination. Very simple. As simple as that. This can be asked for 5 marks. Let's move on to the next illustration. Illustration number 6. From the following data, estimate the national income and personal income. What is saying? Estimate the national income and the personal income. What is national income, sir? National income is NNP at FC. This is an important question. Mark it as important from examination point of view, right? So that is net national product at market price. So what is given to you? You are given NNP at MP. And what is the requirement? You have to calculate NNP at FC. Okay, then he says income from property and entrepreneurship accruing to the government administrative departments. Now this is what we have already discussed about it in this part. We have already discussed about it. What, sir? This is the domestic income accruing to the public sector. This is what? This is the domestic income. Domestic income accruing to, we have just discussed about it, accruing to public sector. So it is is it a personal income? No, sir. This is not a personal income, right? Indirect taxes are given, subsidies are given. Okay, whenever the indirect taxes are given, the first thing you need to be very careful about is that whether it is the net indirect taxes which are given or just the indirect taxes which are given to you, right? So if it is the net indirect taxes, that is indirect taxes minus subsidies, or if only indirect taxes is written, right, that means those are not net indirect taxes. Be very careful with this thing. Now the savings of the non-departmental enterprises, what is this? This is again domestic income accruing to public sector. Interest on national debt, current transfers from government, current transfers from the rest of the world, and then you have the savings of the private corporate sector and the corporate profit tax. Now this is what? This is again not a part of personal income. Okay, the first thing is you need to calculate NNP at FC. From NNP at MP, you will subtract the this indirect taxes and add subsidies, right? So you will get the national income. National income is NNP at FC. So NNP at MP minus indirect taxes plus if there are any subsidies. So 1746 crore is the national income. Now coming to personal income. Now personal income is national income, whatever you are earning from the national income, because in the national income, what is the base? The base is the payment to factors of production, right? And if you are making payment to the factors of production, that is what? If you are making payment to the factors of production, that is what? That is a part of personal income, right? Somebody's personal income it is. Then from this national income, you will subtract the income from property and entrepreneurship accruing to government administrative departments, because this is what? And the savings of non-departmental enterprises, because this is what? This is domestic income accruing to public sector. This is nothing but your NDP at FC, right? This has two components. One is the public sector. Another one is the private sector, right? So this public sector part you will be removing, add, right? So this is done out of the total national income, because this was a part of national income. Now this NDP at FC, it is a part of national income only, sir, right? So we have taken the national income minus income from property and entrepreneurship, because it was included in the national income. Savings of the non-departmental enterprises, it was included in the national income, right? Then interest on national debt. Interest on national debt, as an individual you might have provided, right? You might have provided the debt to the government departments. From that, if you are earning the interest, that is national debt interest. National debt means the nation has taken a debt, and as an individual you have provided the debt, you will get interest. So it will be the personal income of the person or the entity who has provided the debt, right? Then after that, the current transfers from the government, yes sir, it is definitely to be added, and the current transfers from the rest of the world. This is other than primary income. This is other than primary income. That is other than net factor income from abroad. If in this question you are given the net factor income from abroad, you will not take it separately. Why? Because that is already included in the national income. Net factor income from abroad is already included in NNP at FC. Be very careful. I am giving you the twist here, that how institute can ask you in the examination, how institute can twist the things. They can be giving you this net factor income from abroad. You don't have to add it separately in the personal income, right? You have already taken the national income, and net factor income is already a part of national income, right? You don't have to subtract it, you don't have to add it. So current transfers from the rest of the world and the current transfers from government you will take, and minus the savings of the private corporate sector and the corporate profit tax. This is what? This is, we have already discussed, this is income earned but not received. Income earned but not received, right? Taxes you are paying to the government. Savings is you are a shareholder in a company, right? The company says that we will not distribute the profits, we will not distribute anything, we will retain and reinvest, right? That is the planning of the company. So you have earned that money, but are you getting it? No sir, you are not getting it, right? So that is why this will not form the part of private income. So it is to be subtracted. Current transfers from the rest of the world, this is to be added. Savings of the private corporate sector and the corporate profit tax. So personal income you will get is 1711. Clear? Any doubts in this thing? Any doubts? Absolutely clear? Okay, let's move on to illustration number 7 quickly. Small illustrations. Calculate the aggregate value of depreciation when the GDP at MP of a country in a particular year was 1100 crores. Okay. Net factor income from abroad was 100 crores. Great sir. NFIA. The value of indirect taxes minus subsidies is 150 crores. So this is what? This is the net indirect taxes that is given to you. Net indirect taxes is 150 crores. And the national income is 850 crores. That is NNP at FC. and you want to calculate the depreciation. You want to calculate the depreciation, sir. Clear? So in the NNP at FC is given. If in the NNP at FC I add net indirect taxes, what will I get? In NNP at FC, if I add the net indirect taxes, I say NNP at FC plus net indirect taxes, right? That is 850 plus 150. This is what? This becomes what? This becomes NNP at MP, right? NNP at MP. Now, after that, I can move on to another concept, that is NNP at MP is now you have calculated, that is 1000 rupees, right? This is my NNP at MP. So one thing is, I want to go from national to domestic, right? What will I do? From national to domestic, I will subtract here. If from NNP at MP, if I subtract NFIA, net factor income from abroad, what will I get? I will get NDP at MP, right? If I subtract this, I will get NDP at MP. So NNP at MP is 1000, right? Minus NFIA is 100. So that becomes my NDP at MP, right? So this is 900, that is NDP at MP. Clear? NDP at MP is 900. Now, what I want to calculate? I want to calculate GDP at MP. What is GDP at MP? Not, I want to calculate depreciation, right? So I have what? I have GDP at MP is equal to, okay, how do you calculate? Not GDP at MP. I'll take here. How do you calculate NDP at MP? That is GDP at MP minus depreciation. Now, if I want to calculate depreciation, I can write it as GDP at MP minus NDP at MP, right? So what is GDP at MP? GDP at MP is given as 1100. NDP at MP we have calculated as 900. So that becomes 200. 200 is the depreciation. Clear? Any doubts? So we have done it in a different way than what institute has done. They have already done it correctly. They have also done it correctly, sir. Right? So they say GDP at FC is equal to GDP at MP minus the net indirect taxes, 950. Then GNP at FC they have calculated. Then NNP at FC minus depreciation. Accordingly, they have calculated the depreciation. I have done it in a different way. Right? You can do it in any of the ways which is comfortable to you. Clear? Very good, sir. Okay, let's move on to the last illustration, illustration number 8. On the basis of the following information, calculate NNP at market price. Now, what he is asking, he is not asking you to calculate the NNP at market at factor price. This is not national income, right? And disposable personal income, right? Okay, so NDP at factor cost is given to you. Now, what is given to you? He says NDP at factor cost. So, two things you will need to do. First thing is, you have to convert this factor cost into market price, and the secondly you have to convert this domestic into national, right? So two things will play the role. One, the net indirect taxes will play the role, and secondly the NFIA is going to play the role. That's it, right? To calculate this NNP at market price. Understood? Okay, then he says income from the domestic product accruing to the government. Okay, this is public sector. Interest on national debt, this is a part of your personal income. Transfer payments by government. Net private donation from abroad, this is what? This is current transfers from the rest of the world. Net factor income from abroad, this is your NFIA. This is nothing but your current transfers from rest of the world. This is current transfers from rest of the world. Current transfers from the rest of the world. Now, indirect taxes are given. Now, again, this is not indirect net indirect taxes. No, sir. Direct taxes are given, subsidies are given, tax on corporate profits, undistributed profits of the corporations are given to you, right? So, what will you do? What is given to you? NDP at factor cost is given to you, right? Now, you want to convert factor cost into market price. What will you do? You will add the net indirect taxes, right? You will add the indirect taxes minus subsidies. Clear? So what will you do here, sir? NDP at FC is given to you. Let's try to solve it. Let's try to solve it in our way. Right? What is given to you? You have to calculate what is the requirement. The requirement is you need to calculate NNP at MP. Right? What is given? NDP at FC is given to you. NDP at FC is given to you what? NDP 14,900, right? 14,900. Great, sir. So I will convert it into, first I will convert it into MP, right? So I will do here what? NDP at FC plus indirect taxes minus subsidies. So I will write here 14,900 plus what is your indirect taxes, that is 335, and subsidies 262. 335 minus 262. So what does it come to? 14,900 plus 335 minus 262. 14,973. Now I want to go from domestic to national. NNP at MP. This is what is the requirement. So what will be that? NDP at MP plus net factor income from abroad. That comes to 14,973 plus what is net factor income from abroad? Net factor income from abroad is 80. So I'll add 80 to it, right? I'll add 80 to it. That comes to 15,053. Right? Is it right, sir? Yes, sir. 15,053. Clear? So this is how you can easily calculate. Now the next part is, he says you need to calculate the disposable personal income. Now for disposable personal income, first you need to calculate what? First you need to calculate personal income. Now what will be personal income? Personal income will be the national income, right? National income is what? For national income, you need to calculate NNP at FC, right? You will need to calculate NNP at FC. Now what is NNP at FC? That is NDP at FC plus net factor income from abroad. What is NDP at FC? That is given to you in the question. That is 14,900 plus what is net factor income from abroad? 80. That is 14,980. Clear? So what you have to take is national income. You will add income received but not earned minus the income earned but not received, right? So what is that? What is that? I will name it as A and B so that we can mark it as A and mark it as B. Okay. Plus A. Now, which are the items which are included in the A? NDP at factor cost, leave it. Income from domestic product accruing to government sector. Now, this is B, right? This is to be subtracted. Interest on national debt. This is A to be added. Transfer payments by government. Yes, it will form the part of personal income. Net private donation from abroad. That is current transfers from the rest of the world. It is to be included. Net factor income from abroad not to be taken. Why? Because we have already taken it in the national income, right? Not to be taken, sir. Indirect taxes not to be taken. Direct taxes will take later on. We are just calculating personal income. Subsidies not to be taken. This subtracted, right? So we have taken, marked it as A, 170 plus 60 plus 30. See, 170 plus 60 plus 30 minus what? Minus what? 150 is to be subtracted, 222 and 105 minus 152. So this becomes your personal income. Now he is asking you to calculate the disposable personal income. What is disposable personal income? Personal income minus the taxes or the other statutory requirements, payments that are required to be done, right? So here that will be direct taxes, that is 100, direct taxes 100 that we have paid here, right? So this becomes my disposable personal income. Clear? So these are the 4 illustrations that we have done. Important illustrations. All these are important illustrations. The next topic that we will be covering is, after this illustrations, we will be starting with the new topic. Next lecture will be about new topic, that is measurement of national income. That how do you actually measure the national income? There is circular flow of income. There are various methods of calculating the national income. So I have absolutely simplified the ICAI material in this book, right? If there is anything which is not there, I will let you know, right? Otherwise, everything we have covered accordingly. Right, sir? So see you guys in the next lecture. Till then, stay safe, stay healthy, keep studying, keep sharing. Thank you so much.